Hi, this is Randy Finney with Right Side of the Chart, and today is Monday, September 17th, 2018. As we head into the final half hour of trading, I wanted to do another market update. If you're a YouTube subscriber, this is the first public video for the day. I did a video this morning right after the market opened on QQQ, the SPY, the outlook for the markets, but that was for members only because I also covered gold and some developments there in the currencies I'm watching right now as well. So that was premium content. But let me rehash what's happened and where we're at. This is that 15-minute chart of QQQ I was covering into last week and this morning as well. Basically had this downtrend line. You had a divergent low right here, and we broke out. And we had a sideways trading day. I think that was Thursday, if I recall correctly, right? And yeah, Thursday. We also stopped cold at the dual resistance levels. We had this 184.85 level, which was very well defined right here. Reactions here, here, all over the place. Quite a few reactions. I'm sorry. Let me do this. I did that wrong. Anyways, again, right here we had reactions, and I think there were even some to the left of that chart as well. So that also put in a divergent high on this 15-minute time frame, and that level was price resistance at 184.85 as well as a 61.8% Fibonacci retracement. And that retracement, if you're not familiar with Fibonacci retracements, I would recommend a quick Google search, but they work well in determining where a counter trend rally, if that is what it is, may stop. And they usually stop, not always, but usually between the 38 to 61% fib. So here's your key fib levels. And again, this one stopped cold at the 58. So as of now, and especially after today, this is looking more and more like the recent bounce last week, even though it was technically induced with a breakout above that level, dual downtrend line at 182.65. So far, it's proved to be nothing more than a counter trend rally in what could very well and most likely will be, I think, a deeper move down, maybe this first wave down, whether it's an ABC that we get or morphs into something more. But that's that. So you can see right now, and again, this morning, if you're a member of the site, you probably already watched this. We were right here at the time. As I started the video, came down here. I mentioned that as a support. Had a position in NQ. I stopped the video to cover so we get a little reaction, which we did. There was a reaction there for about 20 minutes, half an hour, so we bounced. And then we took it out. So then I cycled back into that position that I'd taken at the open, in addition to the one I took in through over the weekend. And we broke that 182.65. You can see the TA is working really nice here. I'm referring to technical analysis. Took out that support after that initial reaction there, a little bounce off this 60-minute candle, another 60-minute candle, and then boom, an impulsive breakdown, back test, back test, back test, and a rollover. So there it is. I mentioned at the time 182.52, that's our next support. You can see it down here, pretty well defined across the board on QQQ. Lots of reactions. Again, if it's doesn't jump out to you, these are the reactions I'm referring to, reactions back here. And let me just jump over to the NQ charts. These are the December contracts. They rolled last week, so this is the one I'm focusing on now. And you can see there's support if you're an NQ trader coming up around 74.38 or so. A lot of reactions here, and my guess is that's where we're going to go before before the end of the day. However, SPY's at support as I'm doing this video, so that could trigger a reversal. I'll get to that in a second. There's your other reactions along that level, quite a few. So again, that's NQ and QQQ, but the bigger picture is this. Now, we may get a bounce there. Wouldn't, in fact, I'd probably favor a bounce, but I can tell you this, the bigger picture is pretty bearish right now, because what we've had, that there's that part of that trend line I've been focused on, QQQ. This is, again, here on the NQs. The candlesticks are thin here because these just rolled. We're starting to get the volume into these now. We just rolled out of the September futures. But you can see we had that back test, a breakdown and a back test. We popped briefly above it. So the story was this: a breakdown. It looked like we may have had a false breakdown. At the time, it technically was. We regained that trend line. But I pointed that out during the breakdown here in QQQ and NQ that we didn't have what I wanted to see. XLK, the tech ETF, and Amazon, among other things. I wanted to see those break down because they were at and above trendline support, as was S&P, the S&P 500. So now, what do we have? Well, we have a bull trap. Squeezed out some shorts, I would imagine, last Thursday. Probably sucked in some more longs, and then this is what happened. So there it is, guys. In the bigger picture, let's not ever forget about the bigger picture. And we zoom out these 15-minute charts. We go out here to the 60-minute, or even this one's 120-minute chart. Here's that trend line I'm referring to off the early April high. Early April lows, well-defined breakdown, and just that one-day move, technically induced, whatever it was, that 15-minute breakout. But again, the onus was on the bulls at that point to take it and run. They could have, they should have, they didn't. And look, it's not bull bear thing. It's just at this point in time, there's more sellers in the market. You can blame it on the trade wars. You can blame it on what you want. I said this in the trading room last week, that mark my words, the media will pin a headline on any correction, but this one was priced into the charts, and it's technically driven. Now we've had this failed breakout. So again, that could have went either way. Gave me a little pause when we did pop back above there, but the fact that it failed, that's pretty darn bearish. So now look, little small trend line there, but that opens up the door for more downside. These are targets I said a while ago. I may, as members of the site, I told you for the first time in quite a while, I may add an index short QQQ, and some other things. I'm usually adverse to putting on broad market shorts in a primary uptrend, but when you can get these corrections, and I think there is going to be more, that one is primed as a potential setup here. So let's look at a few more things and we'll wrap this up. So there's the 2-hour chart. Daily chart, the bigger picture on QQQ is this. We have this primary uptrend line, but here's that wedge I've been focused on. There's that uptrend line. It is the same one I just showed you on the 120-minute chart. Breakdown, and from here it looks a little clearer, like simply a breakdown breakdown of trendline support and a back test. Those two candles were basically on the line. So, did they recover the level slightly? Yes, but not impulsively. If you saw a big green candle up there, that would be an impulsive recovery, but we didn't. We tried to regain and failed. And so far, a pretty red impulsive candle today. So probably looking at more downside in QQQ coming. Let's just jump over to SPY, and then I'll get to a couple other things and we'll wrap up here. Here's SPY. I have a couple different boards here, a lot of different draws, but just let's focus on this one minor trend line right here, right now. So here's a trend line SPY is on right now. There's trend line support. Next trend line is right here. I know this chart's busy. I don't know if I have a cleaner. Well, here we go. There it is. It's a nice clean little trend line. But again, the bigger picture, let's not forget that. You have these big divergences that have been building for a while. And as I often say, more often than not, but not always, these play out for a trend reversal. So the potential, the technicals, is certainly pricing in the potential for a much larger correction. Right now, focus on some near-term targets, but again, let's not lose track of the big picture, these daily charts and even the weekly charts that tell us, big, strong negative divergence on the weekly time frame. We could be looking in for one hell of a fourth quarter here in the markets, and I'd be more surprised if we didn't have a decent correction. I'm talking double digits than I would be if we just rallied into year end. So I'll say that. Okay, and I've been mentioning for weeks, I wanted to see this one go. Sometimes I'll focus on Apple, sometimes I'll focus on something else, but right now I wanted to see Amazon break, and that's what we have today, a big red candle. It's going to take one hell of a stick save. It is possible. 15 minutes to go, a little over. But we're looking, if we close down, or especially if we dump into lows and close it towards the low of this candle, that's going to be pretty darn bearish. Looks like we bounced off the 50-day EMA, that yellow line I'm highlighting right here. That's the 50-day exponential moving average. So we kissed that so far on Amazon. But there's Amazon breaking down. And again, it's these divergences, both on the daily and when I go out here to the weekly time frame. Last time you can see the divergences marked here on this chart. 32% correction, 14%. And these divergences are bigger than those previous two. And there it is. So you have a weekly trend line here. That'll be important as well. Maybe we break down on the daily, snap back up in the weekly. But if we print a solid red candle below that weekly on Amazon, it's not good for the market. So that's that. Oh, and I told you on SPY there was one other level to watch. Go back to this in the world of the 15-minute charts. That's it right here. This is what I mentioned also in today's video this morning for members that I had this trend line. Let me move it up here. I had it like this, and I said we can give it a benefit of doubt, draw it out here, but it broke this morning. That was a sell trigger, and that's where I said I added to my NQ short this morning right after this trend line broke. And then the video I've moved it down here to capture just these little wicks right here, and we've clearly broken that now. So whether you want to use the the tighter version like that or this, it's gone. That trend line's gone, and that of course makes up, as you can see, a bearish rising wedge pattern. That was your divergence right there, negative divergence breakdown, and so the SPY has hit support first right here, 289.40, pretty well defined. But again, this is a 15-minute chart, so we're punching through it a little bit. I think the Qs are going to want to go and hit that target first, and then SPY may snap back up here. It'll probably park it around these levels is my guess. The SPY isn't down too bad, really. It's only down a little over 0.5%. And of course, you have your steady Eddie dividends, blue chip stocks, utilities, REITs, all that good stuff in there. So you want to get some more bang for your buck. You trade QQQ, which is 60% technology stocks. And then, as I often joke, it's like XLK, the tech ETF with an Amazon kicker. So if you have Amazon down and you have tech down, Q is going down for sure. So that's that, 1.35%. Those are the levels to watch. And again, I can see a good chance that we're close to the lows for the day with QQQ coming up on support soon. SPY just a little below, could snap back. We could certainly break down because we finally have that breakdown on Amazon. XLK, I don't think I didn't mention that. And I meant to. XLK is right on uptrend line support right there. You can see there's an uptrend line. I have a better pattern here. Okay, the white two lines, this is a bearish rising wedge right here. There's your divergences. This is a longer term, more significant trend line, but XLK is right on that trend line. Now, here's where things get tough, guys. I'm going to wrap this up. I've said in recent videos, I've highlighted that S&P, Standard & Poor's, is doing the first major sector rebalancing in many, many years. In fact, this is the biggest one, I think, since the 90s, if I'm not mistaken. They've been minor changes. They're eliminating the telecom sector. They're going to have a new sector called communications, and they're going to move things around, Apple, Amazon. So what I'm getting at here is you may get some false signals. There's going to be massive amounts of share buying and selling by mutual funds and ETFs as this rebalancing goes on. It should be completed by, I think it's the 28th of this month, but a lot of funds are doing that in advance. So that also plays into the volatility trade. They've been ignoring VXX has been ignoring the technicals or ignoring this move today. It's only up 2.37%. And these divergences have only been extended. So we still have a divergent low, and this one still has a lot of potential. It's really, I started highlighting this back here several weeks, if not a couple months ago, and it's hardly moved down from that level. It's trading mostly sideways. It's down a little bit, but it continues to diverge. So if they can't recover these levels, if XLK breaks down soon, if Amazon can't recover this breakdown, especially by weekend, the end of this week, that is, end of day Friday, you can see a big pop in VXX, easily up here to that 30, 39, 59-ish level, about 43% or so, and quite possibly any of these targets. So again, that's just an unofficial trade. I may make this an official trade on the right side of the chart. If I do, I'll zero in on some price targets and I'll do more frequent updates. But as of now, those are levels to watch. And again, let's just say we're hanging by a string. We're on a precipice, if we will, or the edge of a technical cliff where if we go much lower, we could see a waterfall sell-off. But in this market, sometimes they come in at the last minute and you stick safe, especially if some headlines come out. Which wouldn't surprise me out of the heated trade talks between China and the U.S. Maybe that sparks a relief rally. But if it happens, it's probably going to happen off one of these support levels. So watch that. But the bottom line, for every, let's say, 1% from these levels that the market goes down, that increases the odds, I would say almost exponentially, of a much bigger correction. So if we can drop another 1% off these levels, especially close it there, we're probably looking at a 5 to 10% more downside in the U.S. markets. But maybe they reverse it like they've done in the past. So that's it. But as of now, with everything that's happened, I have to say the outlook is the near-term outlook remains bearish right now. We'll wrap it up here, and I'll do another update if I see anything significant. This has been Randy Finney with Right Side of the Chart. I hope you enjoyed it.